So I'm going to take a few minutes now and talk about three main things: the market, the economy, and the election, because these are the things that are all in our minds. So you can see from that, if we have these long periods, 10 and 15 years, where we have so much upturn, but we've got all this downturn and upturn on the way, what we really have is what we call the market cycles of up and down, but on their way up. And that is true throughout. So this is a very powerful pattern, and probably the most important thing I am going to say is that pattern of up and down on its way up. So keep that part in mind. Let's talk for just a minute about the market and pandemics. Well, it turns out that historically, pandemics have had very little to no impact on the market. And so after it is priced in worst case scenarios, then it goes on and typically recovers long before the thing that produced the crisis, that is like today. We would expect that the market would recover just as it is doing long before the chaos of the pandemic is seen through. This current bull market that began because of the sell-off also fell further and faster than others. In fact, you have to go all the way back to October 1987. We all call this Black Monday to see anything close to it. And this has actually been worse. It's also actually been better. In March, we, this firm, and many of our colleagues and peers correctly forecast that after the low point, which we did hit in March, late this year, late March, a very rapid recovery, but we also predicted it would be very jagged. That means sharp downturns and upturns, and truly from week to week, even from day to day, we've seen some of the sharpest up and down whipsaws, but the pattern is still clear. So we have to keep in mind that the market is paying attention to the economy. It's not that the suffering is not real, it is, but the market is looking for just as real seeds of recovery. The market rocketed up 45%, bringing all kinds of stocks up. Investors rule: never confuse your politics with your portfolio. And the reason I say this is because what we've been talking about is what the market looks at, and it doesn't care that much about politics. It does care about the economy. The Fed has a model today, and it says that the S&P could rise as much as 17% over the next year. So keep these things in mind, and this is a good time to quote one of the most famous philanthropists and investors, Sir John Templeton, who said the four most dangerous words in investing is "this time it's different." So stay safe, stay healthy, stay tuned, and most importantly, stay invested.